Hey, what's going on, everybody? Thank you so much for joining me this evening. It is, of course, a beautiful Saturday. Well, not so beautiful from where I'm streaming, but at least the snow has stopped, and now there's just ice and snow on the streets. So it's just a wonderful thing. One of my close friends, who luckily lives in a very warm part of the country, said, "You know, I feel that when Mother Nature does that, it's just telling you you should really not live here. You should really just be moving." But I wouldn't live anywhere else. Anyways, guys. Of course, we are back for another breaking Bitcoin market update. I am Justin Wise, lead analyst and senior mentor at cryptocurrencies.com. All right. Hey, guys. Hey, thanks so much for joining me. We got stuff just got real. Math tutor. Hey, Alex, thanks for joining us in the Twitch, man. Good to see you. There you are. I was just giving you that shout out. Hey, Quinn, Maximilian, and Khalil. Hey, good to see you, man. Hope you're doing well. All right. Let's talk, guys. Let's talk. Pretty exciting Friday, huh? We normally don't see stuff like that. What's going on, Fox? We normally see things like that Monday going in. So interesting over the weekend. Excellent pump. Excellent pump. And really a poor time for individuals trying to catch the weekend stream. You know, profits should be taken on long positions. The premium trading group took some short scalps after price kind of leveled out. And now just evaluating, because it's the weekend, guys. And really, trading cryptocurrency on the weekend kind of terrifies me. The only things that are sometimes attractive on the weekends are altcoins. Altcoins are notorious for pumping on the weekends, especially after a nice big move like Bitcoin like that. If you guys are unaware, the pattern that I've noticed is that after a volatile movement in Bitcoin's price or in the other large alts price, that volume drifts, as I've said multiple times on the stream, drifts into segments of the cryptocurrency sector. And of course, we are up a significant portion of the market cap. So the market cap back to January levels. It's almost like the slump of the last 3 weeks didn't happen, according to the market cap. So let's get over to oh, actually, we got to talk about some stuff first. Of course, guys, we do have the giveaway still going on. There are 6 days left in the giveaway, almost 300 entrants so far. So thank you so much, guys, for participating in this for us. We highly appreciate it. We are giving away 3 spots for 1 month apiece to the Kraken Cryptocurrency Premium Trading Group. You get access to the signals and setups, the members lounge chat room, the VIP voice channel, the resource library database, the live trade tracking sheet, our webinar series, mentoring and education, and a personal trade journal. Plus a lot more. You also get access to my indicators that are currently in beta testing for the last little bit of rounds. So we'll actually take a look at some of the changes that I've made to the indicator here. The current indicator that I've been pouring my time, effort, and energy into lately. Sorry, guys, pretty thirsty tonight. Just a nice, easy Saturday. All right, let's go take a look at some of our fundamental data metrics, and then we'll go into the prices, guys. So let's start off as we do with vcdepth.io, and just take your time, VC depth. Take your time. All right, so let's take a look at the market depth ratio. So, market depth ratio was extremely bullish, pretty much for the last 2 weeks, honestly. Pretty much since the middle of February. So the last 3 weeks. Meanwhile, while the market was in a slight slump, we did see the increasing amount of buys just kind of rack up. So, volumetrically, things looking quite bullish. This is, of course, the aggregated amount of bids to asks aggregated across all exchanges for cryptocurrency, or for Bitcoin, specific to whatever we're looking at. And now we are seeing a switch in that. So starting the 8th, right after the big pump, we do see the decrease in individuals wanting to buy. Because think about it. Does it make a lot of sense for individuals to buy at a very high price? No, it doesn't. Especially when, honestly, as we'll see when we get into the charts, you know, fundamentally nothing has really changed. I know that big volatile spikes like that are extremely exciting, extremely great opportunities to trade off of. I know lots of people made out like bandits. Lots of people missed the train. The problem with the people who missed the train and the problem with the people who caught the train is that they're all going to be thinking the same thing. They're all going to be getting greedy. And this is not an area where you want to be getting greedy, in my personal opinion. And also why, with the exception of my TRX H19 short and a couple altcoin trades, mostly sitting out of the market until Monday. I'll reevaluate on Monday and follow the price action. Obviously, if we're looking at the trend in the short term is bullish, so you should correctly only be looking for longs. However, you have to be looking at key support and resistance levels as well, and looking for the area where you do want to establish your short should the market structure not dynamically shift. And unfortunately, guys, even though I know a huge pump like that is exciting, the market structure has not dynamically shifted overnight with regards to Bitcoin. Now, when we're talking about Bitcoin and Ethereum, Ethereum follows Bitcoin just word for word, but it's more volatile. So it's often more lucrative to trade than Bitcoin. Bitcoin can often be seen as safer to trade because it does not swing as erratically or move as volatilely as Ethereum. However, the price action is the same. The trend and direction is the same. Obviously, the big winner was Litecoin. And we were in a long on that. So taking our profit as well, not wanting to be greedy. Okay. What do we see here? What is my point with pointing this out? Is just my point of saying that, listen, guys, we've had a very bullish market depth ratio for the past 3 weeks. Meanwhile, while price action was in a slight slump to the downside. We hit that 33.90 level of support, which I did not think would act as significant support. And again, let's go back to what I said. I said 33.90, if we do not move down below the support level, if we do not tap back into lower levels of support, i.e. go below 3,000, I find it highly unlikely that we're going to be able to tap into the liquidity and volume necessary to break through resistance. Again, that resistance coming around that $4,000 level. So until we're able to do that, I'm not overly excited for a directional long to something like 5,000 or 55,000. Two things need to happen for me to want to do that. I need to see clear signs of capitulation. I need to see price volatilely wick down below 3,000, tap into liquidity, clear out all longs, get everybody on the short side of the market, and then I think price will have the volume and liquidity necessary to move upwards in a significant fashion with enough oomph to break through. Now, should we also actually close a daily or preferably a 3-day, God forbid, a weekly would be better, honestly, guys. If we're looking for a significant change in trend, above 4,000, then that's a potential position along up there as well. But until I get either signs of confirmation, I'll be looking to just trade the range, guys. And if we get to the chart, we'll see exactly what I'm talking about. No, thank you, sir. All right, so we do see now the buyers dropping off. And of course, it's the weekend, so we'll look and see what this looks like on Monday. But as we see, this did not change significantly with weekends when we look back over the past month. When we look back over the past bullish market depth ratio over the past month. But you do have to realize that this would have been unfortunate to trade off of, because if you were trading in the short term, price continued to move down as the market depth ratio became more bullish. So just some things to keep in mind. All right. We'll also take a look at Ethereum since we're over here. We'll take a look at the two big dogs. And what do we see right now? The top market depth ratios today are UDC, PAX, and USDC. So everybody taking their profits on their Bitcoin positions and moving them back into stable coins, especially to sit out the volatility of the weekend. And as we can see, market depth ratio on Bitcoin, Ripple, Litecoin, pretty much all the big ones, EOS and Tron significantly down. Tron, obviously the biggest one. And conversely, the most interesting to short at this current point in time. All right, and we'll take a look at Ethereum's real quick. All right, so Ethereum's market depth ratio continues to remain slightly bullish. So again, as I said, Ethereum a little bit more volatile, generally more lucrative to trade. So we'll keep our eyes on that moving forward when we get over to the charts. All right, let's take a look at our sentiment here and take a look at our bull bear income. As I've pointed out before, one interesting element of this to look at is that when you have either position in significant profit, you generally expect a short-term trend reversal. And we can see this by looking back at the 1 month. Actually, we're going to have to look at the 3 month now, I think, to get more accurate data. Take our short positions off and our long positions and just look at bull bear income. I don't really like the way it repaints this. Fair enough. Fair enough. When we had previously looked at this, of course, this aggregates data as we go along. So it's poignant to look at it because as you can see, if you guys recall from what we were looking at At this point in time, we actually had profitability of long positions at this point in the market right here. And that's actually where the market reversed to the downside. Right here at this level, we do see a spike in bear income. And this is different because now this has aggregated all this data in as well. So if we actually, there we go. Okay, Greg, excellent. Now we can see it if I just zoom in at that time frame. As we can see here, we get a spike in bear income. So this means that short positions are profitable. And what happens to the market? The market reverses. We get the same thing here. And we get the same thing over here, where we get spikes in bearish profitability, meaning short positions are in profit. And what happens? The market turns around. Up here at the last top near 4,000, we had long positions and significant profit. And what happens? The market reverses. All right. Why is this? Because the market is not designed to keep you in profitable positions, guys. The market is designed to reverse. All right. So just as we saw here, now if we look at the past, if we really look at pretty much since January 10th overall, if we look at the big picture, January 10th to, sorry, I want to zoom in on more recent data here. There we go. Excellent. This is what I want to see. Okay. So basically since that last decline, and this is January 28th, overall, we've had over the month of February, bears in profitability. And what happened eventually? Price reversed. And now what do we see? We see longs in significant profit. And moving along sideways right there at the top, very similar to what we saw right here. Very similar to what we saw right here. Very similar to what we saw right here, where price did reverse back down to the downside. So we'll keep that in mind as we move forward. Last thing we'll look at is, of course, the bid-ask sum. We'll start off with looking at Bitfinex. It's going to give us a little bit more short-term price action. We have to coach this all with the fact that it is the weekend. So we had a massive spike in bids beginning on January 27th and really peaking on January 29th. And then that kind of did a slow decline. And then price shot up just right here. And then what's happened to the bids? They've fallen off the map as well, as we've seen a spike in asks. Now on Bitfinex, bids are still slightly higher than asks. And we'll go over to Coinbase. Coinbase, the same thing. We've seen a significant drop-off in bids. And when we're looking, what does this represent about the volume of the order books? This means that a very, very, very significant amount of individuals who are wanting to buy Bitcoin have stopped wanting to buy Bitcoin. And what do I see this little retracement of bidding right here? Mostly being weekend retail traders. Eager to push the top higher than it should be. And then we'll take a look at BitMEX, which is generally converse to everything. Over on BitMEX, we do see the future sentiment is quite bullish. So when we look at the profitability of longs and we coach that we coach that data in, I don't understand why people would be chasing along during the weekend. All right, guys. Now, with that in mind, keep that all in mind as we go over here and look at the charts. All right. Now, let's get things set up. Excellent. Okay, so still working on the upgraded version of the script. It's been a it's been fun. It's been real. Coding my strategy into Pine Editor when coding is not my primary strength has been very entertaining and very interesting. And by entertaining and interesting, I mean sleepless nights searching through Stack Overflow, referencing the Pine reference manual. It's been very fun. The first thing that I do want to point out is never, ever, ever let anybody tell you that exponential moving averages are not useful. I mean, the nice thing about exponential moving averages is that they don't repaint. They definitely do not repaint. So anyways, obviously seeing a very nice, again, this is going to be a kind of a no duh territory for some of you guys, but I want to point out some less no duh stuff. Some less no duh stuff that I'm not sure other people are really pointing out. So the way that let's talk about some changes that I've made to my indicator. So the first thing that I've done to my indicator is that I was experimenting with using the Fisher being above or below 0 to indicate trend changes. And what I just simply realized is that there's a better method. There's simply a better method, and that is Heikin Ashi. Heikin Ashi, for those of you who are unfamiliar with Heikin Ashi, should be one of the most powerful tools in your tool belt if you're looking to trade. Why? Because it filters out noise. Heikin Ashi tells you quite clearly when you should be long and when you should be short. If you just simply trade in the direction of the trend, if you just simply trade in the direction of the Heikin Ashi, it is going to be very difficult for you to lose money. All you have to do is trade in the direction of the trend. You wait for the daily Heikin Ashi to change colors, and you begin trading the direction of the trend. You look at the daily chart for that or your higher time frames for that, and then you start zooming down into your lower time frames using whatever metric that you wish to trade on. Personally, I tend to keep things very simple. I do have a 3-screen layout that I'll be going over in a webinar for the premium subscribers. Just a very, very simple, very hard way to lose strategy that I've been using for quite a while, as well as the Fisher transform when I'm just looking at regular candlesticks. But the problem with Heikin Ashi is that it takes averages. So it can be difficult sometimes to know that, okay, well, I know that I should just in general be short from here, but when you want clearly defined stop losses, when you want clearly defined risk management so that you can execute your position size appropriately, it does help when you can look at regular candlesticks, which are going to be a more accurate indication of price in the short term. And take your trades based off of those. That's why what I've done is I've colored the bars instead of, as I was in the past, I've colored the bars instead of having it based off whether or not the Fisher was trending or not. We can now use the Fisher as a secondary confirmation for a trending environment. Hey, Fifth Ronin, what's going on? As a secondary trending indicator, we can use Heikin Ashi as a primary indicator. So the rules of this are quite simple. This indicator clearly identifies overbought and oversold levels. This indicator clearly identifies whether something is trending or not trending and in which direction. This indicator also spots divergence. So you can use divergence to enter or exit trades. You can use divergence in correlation with overbought levels. So for example, this is telling you right here that you should be in a short on this candle. So on November 8th, 2018, you would have been in a short position. Why? Because the trend is to the downside. You're also below all your daily exponential moving averages. Price is obviously quite bearish. Would have got you in the trade for all of this. This can be seen as an indication to cover. This can be seen as an indication to cover. You don't have to take all your profits. Why? Because the trend is still to the downside. And then again, you get the last indication to cover here. And then right here, you would have been fully out of your trade, putting you right back actually below where you got your initial indication to cover. Absolutely fine. Absolutely profitable. Anybody who's like, oh my God, but sir, this indicator didn't catch the bottom of the market. Well, good luck. Actually, it did. Depends on what portion of the candlestick you decided to buy or cover at. All right. Would have put you in a long position right about here. This would have ended up being a break-even trade or potential profit, depending on where you got in, depending on whether you actually took one of these buy signals to begin stacking up a long position or whatever. It's absolutely fine. And then it would have had you back in the short for the decline back to the market structure, back down to 3,100, and then had you in the long up to the upside. In the short for some sideways action here, in the short for some sideways action here. But the important part is that it would have had you in the long for the profitable position, guys. So the idea here is that your large profits are not going to be made from scalping. Scalping is useful for adding to your account. I do find that's why we do scalp as well. But your most profitable trades, and in my opinion, just the better opportunities are going to be following strong trends. Are going to be following strong trends. So anyways, now if you couch all that with an understanding of horizontal support and resistance, how to exploit the psychology of retail traders, how to use other indications such as volume profile and such as exponential moving averages, I think you'll do quite well. In whatever aspect of trading you decide to pursue. The dirty secret about trading is that it's really not as complicated as everybody makes it sound, makes it out to be. Just develop a strategy and follow that strategy. This will allow you to backtest your strategy and make sure that whatever way you're trading is valid over the entire course of time. But if you simply trade with the trend, more often than not, you're going to be quite successful. You're going to be quite successful. All right, so and actually. So this is what the beta testers are working on right now. I've expanded the beta testers to 6 people, so that we can get this done a little bit more quickly. And I do have some final edits to make to this. I do have some final changes that I would like to make to this. Those things being So as you can see here, what's interesting about this indicator too is that it has multi-time frame features. So you can adjust the Fisher. You can look at whatever time frame that you would like to with the Fisher, which is going to be your momentum oscillator. But it's more than a momentum oscillator. It's just more accurate. It only has 1 bar of lag as opposed to everything else, which has like 3, 4, 5, 6, 7. So it is a lagging indicator, but the divergence can act as a leading indicator. You can source this to whatever you want: close, open, high, low, close, HL2, whatever you want. You can color the bars. You can turn this on. You can turn this off. It's absolutely fine. The biggest thing, though, is you can change your Heikin Ashi time frame. And so I typically will always look at the daily Heikin Ashi time frame. So this means that if I go down to the hourly, the bars are going to be painted pursuant to whether the daily is bullish or bearish. Now, this is where the real power of this baby comes from. This is where the real power of this baby comes from, because this is going to allow you to trade more actively. You can use this on the 4-hour too if you want. I prefer to trade on the 1 hour most of the time because I'm more active of a trader. And essentially, you generally do not want to take counter trend trades. You get indications to short. You can potentially cover right here. And it's your preference on how to use this. There are multiple strategies on how to use this with risk management as well. Just like FX, man, follow those trends. Yeah, man, you definitely don't want to step over dollars to pick up pennies. You know, it's kind of my way of putting it. Hey, Mobius378, what's going on? Okay, so what's this mean? What I really like about this is that we got the indication to sell right here, right after the top. Now, on the hourly chart, price is still trending to the upside. And of course it would be, because Heikin Ashi is going to average price, okay? And after a big pump like this, it's going to take some indications. Now, what are the first levels? We did take some scalp shorts. We took some scalp shorts. We covered right around here this morning when I woke up. Well, actually a little bit after I woke up. But I just saw that, you know, the hourly had not broken below the 21 exponential moving average. And I'm just going to be patient. Now, am I excited about this area of price for a short? Yes, I am. But I'm also not going to throw myself in front of a train because I'm going to wait until Monday and see which way price action leads me to take. Now, if we do go back out to the daily, let's go back out to the daily and look at our key levels of horizontal support and resistance. Now, what do we have? We have our descending trend line right here. Maybe it's going to be more helpful if we actually go look at, it's going to be more helpful if we go look at the Bitstamp. Go look at the Bitstamp chart. We can see a little bit more clearly what we're working with here. Now, we do have some pretty significant levels of resistance coming in right now. All right. We've got the weekly equilibrium block, which we have not been able to break above on 1 attempt, 2 attempts, 3 attempts. Now, if we reverse from here, look at this. We've also been completely governed on the daily time frame by the 55 exponential moving average. It's pretty hard. Getting a close above this would be exciting. But I'm still going to leave myself open to looking at this area in general to be short from, depending on how the daily candle closes. I would not be surprised if on Monday or Tuesday we could see a wick up to this level. And guys, I'm willing to be wrong. And price actually closes above these levels, in which case I might potentially look to reverse direction. But until something drastic happens, all we're really looking at here, guys, is a lower high. You know, and I know that it's very difficult for a lot of people to accept and look at the markets that way. And I know some people might be saying, Justin, that's just not the case, Justin. Justin, look at how big that candle was. We are going to the fucking moon, Justin. Justin, we're going to the moon right now. See this red arrow? See this green arrow on your chart? This green flag? You might as well start waving this motherfucker around because it's on, guys. I just don't think that way, guys. Now, I would like to get some confirmation, guys. I would like to get some confirmation before really being strong in my short. That's why I took profit. I'm going to be patient. I want to see an hourly close below the 20 exponential moving average, and I'll start targeting the 55, and I'll start targeting the 100. I'll start targeting the 200. Let's actually get those levels on the chart. Start targeting our hundreds and our 200s. If we get a nice hourly close below this level, then I'll look to target these levels right here. I'll look for that 4% to the downside and potentially look to scale in, just depending on how the dailies close, depending on how price action goes. But I'm not going to be greedy, guys. I'm not going to be greedy. Not going to be overly greedy. Now, Now, what are some things that I'm going to be watching for? I'm going to be watching for a daily close above the 55 exponential moving average. If that happens, I might potentially take a short scalp up, a little 4% short scalp up, but still be looking at this area in general. I mean, with a trigger finger, be ready to flip down to the downside, because this is really where I see the biggest R to R. Is entering the short right here at this lower high, this descending trend line that price has been unable to close above for quite a while, and take the short position right directly from there. Now, that's pretty much it, guys. That's pretty much it. This has not been a significant change in market structure. I talked about this. I've talked about this quite a bit. I said that 3390. You see, I have the level on the chart. I talked about for weeks the fact that we could see a bounce off 3390, but if we saw a bounce off 3390, I was very, very, very speculative about the fact that it could actually break resistance. Is it a possibility that the bulls just decide to come in mass and shove price up? Yes, anything can happen, guys, and that's why I don't profess to have a crystal ball. It's why I profess to take high probability trades. But the high probability trade in my mind is looking at this area for a short, depending on if the daily continues to be governed by the 55 exponential moving average. Hey, Wally, thanks so much for the $14.99, man. Highly appreciate it, my friend. And he says, get those wicks up. Loving cracking crypto. Learn, earn, don't get burned, man. Love it, bro. Sent you a message, man. Sent you a message. All right, guys. Sorry, when awesome people come into the stream and do very nice things for me, I lose my train of thought. Okay, all right. So, not a significant change in market structure. Price currently being governed by the 55 daily exponential moving average, which I do put a lot of weight on, because as you can see, for quite a long time, we've been unable to close above that level. Bam. All right, so closing above the 55 would be fairly significant in my opinion. So that's the first level that we can start to look at, a tentative long. And as I said, if it's only a close above the 55, then I look to target this area right here. Still with the mindset to be putting on shorts in this zone. All right, because I will still look at this as a fake break, just as we saw right here. We kind of saw the same kind of market structure. We saw price after a big decline being governed by the 55 exponential moving average, being unable to close above it, a little bit of wicks above to the 100, to the exponential 100. And then really the last gasp was this. We did actually close above it. And this is, I recall this. Everybody, I mean, was like, we're going to the moon. I love people, dude. And then what happened? We went to the bottom of the sea. We went to the bottom of the sea. We did not go to the moon. So quite similarly, I'm not really expecting us to go to the moon here, guys, because we haven't tapped into enough liquidity. We have not tapped into enough liquidity, unfortunately. Where is that liquidity? That liquidity is potentially at the yearly low, most likely slightly below. And that's why I said, since nobody knows how deep that wick will go. I mean, that wick could go to 2,700, guys. That wick could go to 2,500. I've seen it before. Bitcoin's seen it before. And that's really what we're looking at for bottom capitulation. But as I said, it depends on the manner in which we wick down below or go below 3,000. If we have an extremely highly volatile wick that wicks down quite significantly and then closes back up near 3,000, then I'll be pretty bullish, guys, and I'll be putting my moon boots on, and I will probably be seeing you guys around 6K. We'll reevaluate from there. If, however, we close volatilely below the yearly low at 3,000, then likely we're going to have more downside before we shift into accumulation. More than likely, then we do go down to nestle against 2,300 and we accumulate at lower levels. Is what I strongly believe. That's why I would rather be in a short approaching these positions. I would rather be in a short approaching these levels than be looking to take a long off these levels. Now, obviously, it worked out quite well for the individuals that went long from 33.90, but that wasn't a lot of people, guys. It wasn't a lot of people. Yeah, if we went to the inverse moon. Yeah. Well, hey, if we just do this, let's just invert the scale. If we invert the scale, I mean, hey, that looks pretty bullish, you know what I mean? You know, it's kind of one of those things I've said before, guys. Looking at the inverted chart right here, let's talk about this. Excuse me. What have I said? That as we approach resistance on low volatility and low momentum, that is a sign of strength in the underlying trend. So since we're looking at the chart in inverse, that means that we are showing signs of strength in the bearish trend, not necessarily signs of strength in the reversal pattern right here. And if we look at this conversely, look, what do you guys, trend trading strategies, guys? Look at our exponential moving averages and look at the 55. Every time price, if we're looking at this and we think that this is just a regular price chart, every time that price comes into vicinity around the 55, we've got this ascending trend line. These are areas where we want to be taking our longs from, right? So let's go back and look at reality. That was me. I longed it. Right on, Mobius. I like it, man. I like it. At time, I couldn't tell you, man. I couldn't tell you. All I know is that if price just begins its slow descent back down here to 3,000 and continues to make lower highs, then without a doubt, I do not think that the yearly low will be supportive. They already bought this level up. They already have now bought this level up. They didn't really buy this level up before. They bought this level up before. So generally, when something is bought up once, it rarely acts as, again, I have kind of a unique idea of horizontal support and resistance. You look at areas where price was aggressively initiated from, not where it previously bottomed. Those levels rarely act as support. Conversely here, you can see that actual levels of horizontal support and resistance need to be drawn with a crayon and not a fine tip marker. So for the purpose of that, let's make this crayon style. Let's see here. Do you think we bottomed if we wick down to 2,500, or did I misunderstand? Yeah, so if we wick down and then close back up near the vicinity of 3,000, I'll be quite bullish. Because that'll let me know that the bulls have bought up price, that we've had everybody that wants to sell has already sold, and now we can start seeing everybody that wants to buy begin buying. But if we close down below this level, then more than likely we move into consolidation around 2,300, which has been my long-term price target for Bitcoin's bottom here for quite a while. $23.31.36 actually, to be precise. Now let's try time on the right side. Let's try time on the right side and price on the bottom. Let's try time on the right side and price on the bottom. That would be interesting, yeah. All right. Not a whole lot else to talk about with Bitcoin here, guys, honestly. Yeah, not a whole lot to talk about with Bitcoin. We've got this level coming in as pretty strong resistance, guys. Again, if we... Oh, that was loud. That was loud. Hey, Chili Willy, thanks so much for the sub on YouTube, man. If we close above the daily 55, you could potentially take a long scalp. It's just a risky trade, man. You could potentially take a long scalp and be on the right side of the trend. Because if we do look at the Heikin Ashi trend is... Oh, hold on. I can fix that. Come on now, TradingView. Don't embarrass me in front of my friends. There we go. If we look at the daily Heikin Ashi trend, the Heikin Ashi trend is bullish. So typically you want to be on the right side of the trend. However, you do want to coach that in with a simple fact. So I'll be very consistent in what I said previously. As we can see on the hourly chart, we did get the indication to buy right here. Got the indication to sell right here, following the very simple tenets of this indicator. You could have waited for tertiary confirmation. Thank you so much, Mendigaus, Norcus. We would have got that secondary confirmation right here when price closed above the 21 exponential moving average. And you have to take this with a grain of salt, because yes, price gets whipsawed around the 21 exponential moving average a little bit. That's fine. But you're still trending to the upside. The Heikin Ashi trend is still bullish. Now, it's fine if you want to be, if you want to trade like I trade and frequently enter and exit positions. Potentially you take a very small L on that and then re-enter right here. Why? Because you've closed the hourly above the 21 exponential moving average, and also now you have 3 levels of confirmation. The Heikin Ashi trend is bullish. The Fisher is now above the 0 line right here. You did get some divergence back here, as well as a previous buy signal, an oversold buy signal. You close above the 21 exponential moving average. The Heikin Ashi trend is bullish. The Fisher is above 0, and you just trade on the side of the trend, guys. And then right here, you get your nice exit signal. You take your profit. You take your profit. Now, if the hourly closes below the 21 exponential moving average on the hourly chart, and the Heikin Ashi trend turns bearish, and the Fisher crosses below 0, guess what? As I said, I'm going to be establishing my short position, and in the short term, just targeting these levels right here. And then if we close below the 200 exponential moving average on the hourly, I'll look to develop more positional short positions, more long-term short positions, because then that will obviously be a clear rejection of this level. But not looking to establish that over the weekend. Again, I hate trading on the weekend. It's just notorious for retail traders who are just trying to buy up this top. And really all they're doing is providing liquidity to everybody that is looking to take their profits. Let's see here. What if we wick to 1,000? Is it still can be considered a hyperwave? You know, I don't know anything about hyperwave theory. Well, I mean, that's not correct. I've studied Elliott wave theory and I understand it. I just don't find it applicable. It's just not the way that I like to trade. Because I put that in the realm of crystal ball gazing. Crystal ball gazing. Because, you know, as I've tried to do, like, let's be honest. Let's be honest about one thing, guys. And this is something that a lot of analysts just won't tell you the truth about, but I will. So I've got lines drawn on the chart, and I've got, you know, my analysis about certain levels and what this will do and what price might do around here and what price might do above here. But that's all speculation. I don't know. I don't know what price is going to do. I don't have a crystal ball. That's why I trade on the side of the trend. That's why I trade on the side of the trend. That's why I have very clearly defined rules for pushing the button and putting my money in the market. And because I have those clearly defined rules that I've been using for years, I've been able to do this profitably. Taking trades based off analysis is not the way to do it. What I do, the reason I do analysis is because it helps me develop a bias. It helps me develop a bias. And so I have a general plan of what I should be looking to do when price comes to these levels. And then if price action confirms my original bias, great, awesome, cool. Now I'm going to take a trade. But if price action does not confirm my bias, well, I just say, you know what? I was wrong. That's cool. The market knows more than me. I don't need to be right. This is not a game about being right. This is a game about following the direction of the market. Dun, 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 dun. Hey, Starman Jack. Hey, what's going on, man? Glad you could join us from Bangkok, man. Highly looking forward to trading with you too, man. Show him Dorenko. Oh, I don't know, man. I don't know if I can do that. That's that secret sauce, Alex. I don't think the world's ready to see that yet. Nigel Wood says whales can push it to the bottom. Yes, they certainly can. Starman Jack says I'm out now. Nice little learner. Hell yeah, man. Could I talk briefly about the stochastic RSI on Bitcoin? Yeah, I could. Stochastic RSI being my least favorite, probably my least favorite indicator of all time. But we can look at it. So the stochastic RSI is simply taking RSI and applying the stochastic method to it. And then plotting your trigger line, which is an exponential moving average of that newly transformed stochastic. The reason why I like the Fisher transform better is because I find that it has less lag. It gives more accurate indications. It gives more accurate sell signals. Even though the stochastic RSI, I know. Listen, I know. I have some people that really like it, but overall, I'm not a big fan of the stochastic RSI. You can see here that that it started bottoming right here and actually gave you signals right here, here, and here. Actually gave you signals right there, which is fine. I mean, we have to understand the limitations of a momentum oscillator. And you could be saying to yourself, well, but Justin, look, you know, your indicator gave us buy signals here. Yeah, it's absolutely fine. I'm not sure. Again, I like to speak on what I know. So I like to speak on what I know. Backed is trying to crash the price / pump. Potentially. Hey, thanks, How I Made. Yeah, so I guess we can speculate about news too. I did see that news article where the now I'm gonna sound like a dummy. But essentially, one of the spokespersons for the SEC said that the ETF was likely to be approved. You know, guys, don't get yourself sucked into all that. You know, backed the ETF, this, that, and the third. Are they exciting, awesome, amazing, wonderful stuff? Yes, they are. But you know, people with money move the markets, not news, man. Okay, so we've talked extensively about Bitcoin. Ethereum's going to be identical to Bitcoin. Ethereum's going to be identical to Bitcoin, just in general, more profitable to trade. So here's the daily. Here's the daily for ETH. Again, being a little bit more volatile, we actually get some clearer indications with ETH for trading. That's why sometimes I prefer to trade ETH, but you did get the buy signal right here. You get the buy signal right here. You didn't get a secondary buy signal right here. Let's make sure I got this set correctly. Yep, cool. Now let's go down to the hourly and see how we would have actually day traded this bad boy. Yep, so here's the hourly time frame right here. You're trading against the trend if you do take the oversold buy signal right here, but you get the confirmation to go long right here. And then you get secondary confirmation on this candle right here when you close above the 21 exponential moving average. And actually on that very same candle, the Fisher goes above 0. So you're able to filter out all this noise. You're able to filter out all this noise. The fact that price goes down below the 20 exponential moving average, the Fisher is above. We're trending to the upside. And where do you get your exit signal? Boom, right there. Using this tool and looking at the daily time frame, looking at the daily trend, is quite a powerful strategy, guys. It's just very simple. It's very simple, guys. Analysis is great and cool. Having a strategy that you can trade is better. Having a tradable strategy is much better. Because when something goes wrong, you know why. You know what you can fix. When something goes wrong, same thing. All right, daily time frame. Let's get rid of the stuffy stuffs. Daily time frame. Fairly the same thing. Now Ethereum did not run up and test the bucket again and reject as violently as Bitcoin did. So it's very difficult. We don't have a descending trend line. We don't have anything like that, and we don't really need one. Let's take a look at the volume profile. Where are we at right now? We're just kind of like, we're kind of right in the middle of no man's land right here. We're right, actually significantly kind of right in the middle of an LVN, which is kind of interesting. So this means we have a fairly significant HVN level of horizontal resistance above us. We're coming right up, we're butting up right against that 55 exponential moving average. For Ethereum, should we break this, I guess our next significant target is if we do close the daily candle above the 55 exponential moving average. The next levels that we could be looking at for potential profit targets are, of course, the next level of resistance, which will be running to around 140, 145. We do got our 100 exponential moving average coming in a little bit before there, so that's coming in around 143. Okay, so yeah, just in this range right here, just in this general range right here, this previous breakdown zone. Now, remember what often happens when we approach breakdown zones. What often happens when we approach breakdown zones is, actually, you can see I have the levels on my chart. Next potential short-term targets are 135, just targeting HVNs, and 148. So remember what often happens when we approach breakdown zones is that we actually generally form a lower low if we're going to actualize to the downside. So be on the lookout for that. Again, hitting that 100 exponential daily would actually be forming us a lower low, or lower high, excuse me, and also would be congruent with this level of horizontal resistance right here. And you'd also be front running your HVM, which is generally smart when you're looking for profit taking targets. But until that happens, still sitting out, still going to wait for hourly price action to confirm me taking a trade, because right now it is not. If we look at the hourly price action, price is still above the 21 exponential moving average. Price is just recently above the zero line of the Fisher. We just had a big, huge, momentous pump, so I'm not super eager to look to be greedy, to look to take along at this point in time. Took a short scalp on Ethereum. Took profits right around here just this morning when I was waking up. Just as I saw us coming into contact with a 21, and I saw the fact that we did not break it, in fact closed above it, I exited my short scalps. Yeah, we can take a look at BCHSV, man. Hey, no problem, Gage. Did I say inevitable? Did I say inevitable, Wally? Remember what I told you guys. Anybody that uses the words must, has to, of course, inevitable. Eventually, I think eventually is okay, you know. I think eventually is probably okay. Law and Order, BCHSVU. Dun dun dun. All right. K7 Jixer, what's going on, man? Litecoin buy orders are stacking up, could pump soon. Let's go take a look at Litecoin global market depth. So this is measuring all. This is measuring the books on all exchanges right now. So the last time this was updated was 1 minute ago. 1 minute ago right here, and we can see that overall the bids continue to fall off. The asks do continue to rise. Individual exchanges may vary. So Bitfinex a little bit more bullish than the others. Bitstamp not bullish. Binance not very bullish. Huobi not very bullish. Bittrex very bullish. OKCoin a little bit more bullish. And I don't know. I don't even know what X is. I'll trade on X. But we'll go take a look at it, man. All right, so let's start off the Hmm. Interessant. Interessant. Oh, big shout out to Alex, man. Big shout out to Alex. Litecoin hitting some amazing targets that he had posted. So kudos to him, man. Good kudos to him. All right, let's look at the volume profile. We seem to have some nice confluence here with the next potential target and the next significant level of resistance. We've got our 200 daily exponential moving average coming in, and we do see that we can front run the HVN at 52. That's also going to be it's also going to be a 0.5 Fibonacci extension right there of that previous move that was stopped out by the 100 exponential moving average. So that's your next long-term targets. Obviously, trend is still bullish. Let's go down to the hourly and see if I actually want to initiate a trade. There we go. Potentially yes. But for the same reasons as I just listed above, most likely won't. After just a huge pump like that, I kind of want to wait for price to kind of settle itself out, and I don't like taking trades on the weekends. Although I do, if we go to my weekly analysis, and again, this is all posted in the Discord too. If we do go to my weekly analysis of Litecoin, I don't really see a lot of reasons to be not bullish. Now, one thing that does give me a little bit of pause is I was actually talking about the 21 weekly exponential moving average acting as resistance, guys. The more higher time frames that you go up to, the higher the time frames that you go up to, the more significant the levels of resistance. And we had 3 nice slow crawl weeks, and then obviously one nice big week that really culminated in Friday. Now we're at this level, and I just want to evaluate and see what price does. We don't really have a lot of anchors, guys. We're coming back up to retest the general zone of this breakdown zone right here. If we close above that 21 exponential moving average, then yeah, I think that our next targets are, as I said, right above that. Just as I said, if we go down to that daily chart, let me put some numbers on that. Yeah, around 45, 55. If we go to the weekly time frame, really the next level of resistance that we have is we've pretty much got an LVN up until about 53, 55 is where the HVN starts. So that's another 24%, 25% to the upside. So where do you manage your risk? Let's check out the 3-day chart. 3-day chart coming up and butting up against the 55 exponential moving average. Where do you manage your risk? Well, that's your personal preference. Generally, if we're looking at the weekly time frame, if the candle starts trading above the 21 exponential moving average, you would typically set your stop loss at the candle that breaks it. Same thing if you want to use the 3-day chart. If the 3-day breaks above the 55 exponential moving average, you set your stop loss below the candle that breaks it. You can also use an average or multiple of ATR, which I have down here. So let's actually go to the weekly and see what it tells us to do. So taking along, we're going to have to adjust this. So let's do, since we're on the weekly time frame, let's do a multiple of 0.5 and 2 ATR. Let's do that. ATR would be a short, let's see here. So a long stop loss of $37 and a long take profit of 71. So I'm going to couch that with saying that I'm not going to use ATR because that's going to put us up to 71. That's 56% to the upside, but that's using weekly ATR. I'm more inclined to do just trade on the side of the trend, guys. Just trade on the side of the trend. Weekly trend is quite bullish. Just gonna be patient, man. Just gonna be hesitant. We're coming up on resistance pretty much everywhere. And I know that I know a lot of people are got their moon boots on, but Litecoin is the only one that I see. So Litecoin, Ripple, and Tron are really the only coins that I see deviating from the trend. So everything else I have to couch and govern with Ethereum, and I have to couch and govern by Bitcoin and Ethereum identically. But Litecoin, Ripple, and Tron are the only coins that I see that have the potential and that have broken away from underlying trends. So we can analyze them separately. So just because something negative happens to Bitcoin doesn't necessarily mean that we can't still be bullish on Litecoin. Anyone who says he also trust me. Yeah, I don't. I want people to develop their own trading ideas. What do I think about the Everipedia IQ token? I don't think anything about it because that's the first time, literally the first time I've heard of it. I do kind of like Augur. I was looking at Augur. I don't trade falling wedges, but I do like the way it looks. We'll look at ZERP. K7 says, I see the Litecoin high at 70 bucks. Oh, well, then ATR has given you some confluence there. That's a 2x extension of the weekly ATR. $71.86. I see. So you're just using. Okay, cool. Yep, you're using this previous level, previous support, turn previous resistance. Cool. I like it. Well, yeah, of course it's not surprising that the Bitcoin candle is a doji because it's the weekend and we just had a big pump. Just about everything's going to be a doji as people are looking to take profits and retail traders are trying to buy the top. Whether or not it ends up being the top depends on whether we close above significant resistance on higher time frames. Let's see here. All right, so Litecoin. Oh, ZERP. Yeah, we'll check out ZERP. Sorry. Let's go to the daily. Yeah, man, daily still looks rough, man. I do fundamentally want to. I talked about this. I talked about this the other day. I talked about this the other day. I talked about the fact that I do want to fundamentally be bullish on ZERP, and I am fundamentally bullish on ZERP. We have the momentum on just about all the higher time frames, but I talked about how I'd really like to be cheeky and snag some ZERP up here, right around 80.50 or potentially around 7,500 if I could. I've got buy orders set right there. So we'll see. We do see that the momentum has kind of shifted to the downside. We've had two bearish weeklies, especially after this pretty wicked doji right here that kicked all the shorters out of the trade. So when I look at things like that, it's pretty interesting, man. So looking for my levels of confluence here, the Heikin Ashi weekly trend is to the downside. We're testing the 21 exponential moving average, which again, you would typically want to be long from. But now I also have confluence with my Fisher being below 0 as well. So going to the 3-day. 3-day as well. Bearish momentum slowing down a little bit and coming up to the 55. So I'll keep my eye on this. If we close below that 55, then I'm going to be really, really happy, really excited to get my buy orders filled at 80.50. At the very least, I'd really like to get my buy orders filled at 80.50. But we'll see how cheeky we can be. 3-day down below the 21 exponential moving average, so I can't really take a bullish trade on this yet. We might potentially see some bullish divergence here on the 3-day if we do turn, which we haven't yet. So we haven't really kicked in any bullish impetus yet. 24-hour time frame starting to move extremely flat and sideways. We're not going to see any kind of divergence on that. So I think really the big thing I'll be keeping my eye on is seeing if the 3-day turns and seeing if we get that bullish divergence. If you see the 3-day bullish divergence, you could potentially take a trade back up here to test the 21 exponential moving average. You could add to your position if we close the 3-day above it. Right now, the first level of resistance that I really have coming in is 90.87. So if we look at the big picture for ZERP, I do think that we do. Excuse me, my long-term target is 1400. My long-term target is 1400. But that's all pursuant upon us. That's all pursuant upon, I guess, really, and me personally, is me getting filled on a wick around. Is me getting filled on my wick down here around 7500. If we close the weekly below 7500, then I'm probably going to take the L and freak out. So let's see here. So we were short. We were short. We took profits. Now I'm just waiting to reestablish a directional short. I'm just going to wait and kind of see what happens here. Again, the big thing in my mind is do we close below that weekly 21 exponential moving average? Because then we're going to head down to that. Then we're going to close down. Then we're going to head down to that 55 exponential moving average on the weekly. So what am I going to need to see to take a long on? What am I going to need to see to take a positional long on ZERP? Positional long on ZERP. I'm going to need to see us get back above the daily 100 pretty quickly, and really stave off this LTF death cross. That's what I need to see. I need to see us stave off this LTF death cross. Because again, we had some very, very, very bullish momentum. And then we have some bullish and bearish divergence right here at the top with this double top, and then we've just been in a bearish slump since. So I'm looking for the opportunity to get back into the upside. But other than that, you don't have any indications to be out of a positional short yet, unless you got kicked out here, which sucks. That's why you don't chase parabolic movements. You just trade in the direction of the trend, guys. I'm going down to the hourly. Do I see anything coming up? No. Nope. I don't see any hourly trades to the upside. Trends hasn't shifted. We're below the 21. Fisher is about to do a fresh cross under right here. So this might even be a potential hourly short trade. Okay. All right, let's get over here. And we'll look at BTT, BTC. Nothing's really changed my opinion. We're coming down into my buy zone. Actually, sorry. I adjusted this. So I had original entry right here at 522. Didn't take the trade, although you could have taken that little scalp, but I decided to go ahead and move my move down to the lower end of my buy zone. So depending on when the members I posted that update like 2 days ago. So before this actually happened, I started posting it here when I saw price moving down volatilely. So some could have got the cheeky buy at 21.22. And made off with about 20% profit if they were able to catch that hourly resistance right there, as they should. Right now, we do have enough data to have a hourly 200 exponential moving average, so we'll see what happens. Things are getting pretty tight right now. If we go ahead and break to the upside here on the hourly and the Heikin Ashi and the trend changes, and we change to the upside, then I'll go ahead and probably enter into my trade and just trade the momentum, because I do think that BTT's got quite a ways to go. This is the logical area. We had a nice moon mission right here. It seems logical to buy the retest or the retrace and to target the extension. Seems logical to me. So everything getting real tight, moving into a period of consolidation on the hourly time frame right here. Let's see if we break to the upside now, or if we have some more downside potential in us, or if we can maybe get my cheeky wick down to 19. BCHS VBTC, I believe. BCHS VBTC had a very, very, very beautiful spike back up. Got the buy signal right there. Actually, we're dollar cost averaging into this for a while. Boom, 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 boop. Very nice. Although you could have waited for confirmation. You would have got that here on this candle right here on the hourly time frame, actually. Why? Well, you could have really started. You really could have started entering here, because the the daily trend does go bullish. You get, because we're bullish, you get an oversold signal. And then right here, actually, the two hours before the pump, you get the Fisher going above zero as well, which is your tertiary indicator. You don't actually go above the 21 exponential moving average, so you might have missed this one. But if you were watching the hourly time frame, you did have some indications to catch the pump. Let's see here, and then you get unnatural volume on these big spikes. And I don't know about you guys, but when I see candles like this, I take profit. Take profit, dude. You don't be greedy, man. Like, with altcoins, like, I mean, come on, dude. And that's also the top of the daily falling wedge that I had drawn. Again, I don't like falling wedges, but I chart them so I have something to talk to other people about. And again, don't let anybody tell you that exponential moving averages don't work. Look where price stopped, right at the 55. 21, 55, 100 to 200. They're powerful. All right, so going back down to the hourly time frame. I don't really see anything in here that makes me want to take a trade, man. Let's see here. We did get a little bit of bearish divergence right here on this candle. As you can see, we had a lower low in price action, but a higher high on the oscillator. But that already really played out, and we already came up. We got a 1% trade off of that, so that already played out, man. So the thing about trading divergence is that you never know. You can never know how strong the movement will be. I don't see any indications to be looking for another BSV moon mission anytime soon. I gotta wait for the trend to change, man. So what are some important levels to watch out for? You could pay attention down here, right around 173.363. If you wanna try to respect the falling wedge pattern. If we go out to the hourly, or excuse me, go out to the daily. Let's see here. So let's get rid of that. I guess the next level of potential support that we have coming in is the top of the HVN and the equilibrium swing down here at 16144. That's the next area that you can keep your eye on. If we disrespect the falling wedge again, then potentially going down to 16144. And you guys can wait for confirmation, because if you guys look to the daily time frame right here, you do see this falling wedge pattern. You've got your 21 exponential moving average right here and your 55. If you want to actually play the falling wedge for what it is, again, the traditional way that you're going to see this done is by measuring something like this and then measuring above to your breakout point. I don't really like doing that. I prefer being conservative, so I like taking multiple measurements. So I will often do something like take the median. So there's the median right there. And I'll look for something like an equilibrium swing, but I'll measure that down there. So what's the equilibrium swing right there is something like 25%. So then you can measure that from your level of breakout, 25%. What are we looking at right there? Previous resistance, previous support, HVN. Okay, I kind of like it. You could be more conservative and front run it down here for an 18% profit. I always like to front run levels of resistance. So, potential option for you guys. That's if we do break up out of the falling wedge. That would be confirmation. Closing above the daily 21 exponential moving average, closing above the falling wedge pattern, closing above the daily 55. Yes, it'll be good to go. And then that would give you a target of 0.0231, 0.024. Icon. Icon's interesting. So daily time frame, your EMAs are getting pretty flat in consolidation. You're accumulating, or you're either distributing or reaccumulating in between your 21 and your 55 exponential moving average. However, the point is the same. You did get oversold indications right here. You're now above your 21 exponential moving average on your daily time frame. You have your Fisher crossing above the zero line, and the Heikin Ashi trend is green. or excuse me, your Heikin Ashi trend is bullish. So you do got a daily level of resistance above you, the 55, but your next significant level of resistance is going to be 742, or you can also target your 100 exponential moving average on the daily time frame as well. Go to the hourly time frame and see if we get confirmation with that. Yep, hourly time frame right there. Might not be a bad entry, man. Just be careful for a fake out, man. So have some nice hey, thanks for the sub, man. I post, thank you so much. Because we've met my qualifications, we've got a bullish Heikin Ashi trend. We've got price closing above the daily 21 exponential moving average, and we do have price crossing above the Fisher as well. No divergence to speak of, that's fine. Just be careful because this has happened before, but without, this happened here. Here, but you got the indication to be out because you did get the indication of hidden divergence. So if you would have taken the trade here, you would have been out very quickly at a very little loss before price really tanked down on you. I would manage risk. That zone right there, man. And then if the hourly candle closes below, I don't really like that. Really, I'd manage risk if the hourly candle closes below the 200 exponential right there, or excuse me, the 100 exponential. Throws off your R a little bit. I mean, by all rights, you can exit the trade obviously if you get the hourly dropping back down below the 21 exponential moving average. What time is it? Whew, 6:21, man. Oh my goodness. I haven't even taken a break yet. I gotta go get some water, guys. I'll be right back, man. Please relax to the soothing tunes of Ryan Little West Coast, and I'll be right back, guys. And we're back, Cookie Kids. Thanks for hanging in, guys. All right. ICX. Let's go to the chat. All right, let's check out OMG for you, Jay. Look at that bad boy right there. All right. I just got a head rush. I must have stood up too fast. All right. Daily time frame coming up to the 21 exponential moving average. Daily hasn't closed yet, so we don't know. Daily just started. It's a fresh daily. It's only 37 minutes open. If we trade above it, if we trade above the 21 exponential moving average, next target would seem to be logically around 349, 350. That's front running the previous HVN, front running previous resistance, and that's also where the daily 55 is coming in. Hey, no problem, man. Hourly time frame seems to fit the qualifications. We were moving sideways. We had our EMAs pretty flat, looking like we're about to have pretty much our last bullish golden crosses right here. That daily makes me a little tentative though, man. It's gonna have legs. It's gonna have plenty of time, man. I prefer to be a little bit more speculative about alts. Seems more likely that that we get rejected from the 21 exponential moving average. That's why I'd wait. Get a nice close above the 21, and you got a nice clear target and well-defined risk. Because then you can set your stop loss below the candle that breaks the 24-hour 21 exponential moving average instead of trying to long resistance right here. Hourly does meet the qualifications, but you got to couch that with what's going on in the daily. Yeah, typically also when you see, if I see unnatural volume at the bottom of a downtrend, that's a pretty strong indication to buy. When I see unnatural volume at the top on a big move like that, generally an indication for me to sell. Just my personal preference. That's how I play it. Daily close above the 21, then you've got well-defined risk. You take that trade up to the 55 or in that vicinity. Again, that's, you want targets. You want targets to help you out, determine direction. But you trade with the trend, man. If you get a sell signal or the trend shifts, man, but then you exit the trade. You're going to be far more successful trading with the trend than, putting sell orders here and refusing to actively manage your trade. That's my personal opinion. Hey, Mitch, what's going on, man? Do I just do TA? It's what I guess that's what I do mostly. I'm a technical trader, so. If so, why did I get into technical analysis? Because I wanted to be able to have a better edge in the market than otherwise I would have. And I found that so far after several years of doing this, that it has. I've always been a technical trader. I've always been fascinated by technical analysis. I've always been fascinated by looking at a graphical representation of human psychology and human action and figuring out patterns and figuring out how I can use that to my best advantage. It's also kind of helped me out, fundamentally psychologically, understanding that human beings do react fairly predictably most of the time. And, I can use that to my advantage to make money. And I do that by selling when most people buy, and I do that by buying when most people sell. It's my personal preference. But overall, managing a trade with the trend. Don't fight the trend, man. Best website, what's going on, man? All right, let's look at BNB USDT. Yeah, pretty much right here, man. The last time we took a stab, got smacked in the face because that's when BNB was doing a fresh breakout of its long-term descending, actually weekly weekly resistance trend line right here. So we did get a nice fresh break out of that right there. Nice fresh breakout. I think BNB has a little bit more room to run. A little bit more room to run. We're coming into that area where I'm a little sketchy. On the weekly time frame. Very nice bullish weekly. So we'll go down to the 3-day. We might have room to run up to $9.42. Where's that coming in on the weekly? $9.28 is where that's coming in on the weekly. $9.42. You might have room to run up to $9.42, 45 cents before I start waiting. But you don't have any clear indications to exit your long position right now. Daily time frame gives us that same confluence. Gives us that same. Daily time frame gives us that 940. Weekly time frame gives us that $9.24. So, yeah, I mean, you do got like a 3 to 5% profit potential. The problem for me with entering the trend here, with entering a trade here at a market top, without a little bit of stall, without a little bit of pullback, is that it's very hard to manage your risk. Where are you going to set your stop loss? Your stop loss is now the same distance away as your take profit target. Bullish continuation divergence right here, coming in right at resistance on the hourly time frame. Are the qualifications met? Yep. Trading above the bullish trend is green. The Heikin Ashi trend is green, or blue in this case, because it's easier on my eyes. We're above the 21 exponential moving average. This would have obviously been a little bit of a better entry for you. And now we also have the fissure above zero on the hourly time frame. And this time frame will allow you to manage your risk better. So you get an hourly close below the 21 exponential moving average, to be out of your trade. And you wait for another entry. So you do got potential upside targets of going to the weekly time frame. You do got potential targets of $9.22 to the first area of resistance coming to front run in the HVN right here, $9.42. And then we reevaluate. I'd say that biggest pocket of resistance, as you can see with the HVN, is coming right around $9.75, $9.82. But 8% above you. So if you want to shoot for that target, then you can manage your risk a little bit more effectively. Just understand, in my humble opinion, I don't like to chase parabolic movement. Hey, Catherine Morris. I did a full analysis of ZERP earlier on in the show. And yes, Mitch, I've traded options. I traded traditional options. I traded forex. Been doing this for a while, man. Been trading cryptocurrency since 2016, and I like it the most. I like it the most, man. It's if you know what you're doing and you have well-defined strategy, I think you can actually make more money in cryptocurrency if you're a retail trader than you can in forex. Personal preference, though. They're also easier to automate, which, if you really want to be successful, I think you should be using. No, that's cool. You didn't miss it. You can just rewind. Mitch says, also, I got in when the market was hyped and just been dollar cost averaging since because I didn't spend the time to learn TA. Saw so many opportunities to make money. If I just made some trades here and there, it can work out, man. Sometimes we get lucky. But from my experience, yeah, I mean, I think that learning technical analysis and learning a strategic approach to making trades is going to be a valuable lesson, regardless of whether you make trading your full time occupation or not. In fact, I often advise that people do not make trading their full time occupation. Because then, if you make trading your full time occupation and you're just starting out, it's going to be hard to grow your equity curve because you're going to be constantly having to take money out to supplement your lifestyle. That's why on top of trading, on top of my trading income, I also run my business, cryptocurrencies.com, where I teach people how to trade. So my plan with my plan with my portfolio has always been the same, 20 years out. It could, yeah, man. It could K7, yeah, for sure, dude. And like I said, it's got the potential to run up another 3 to 5% before we run into resistance, and then we can reevaluate. I mean, but if you're just looking at BNB right now and you want to just buy the top without any kind of pullback, it's just not it's not what I would do. You guys are more than welcome to do your own thing. I guess ideally my point is that, hey man, when we broke that resistance trend line, then you should have been in the trade and looking to potentially start scaling out once we ran into and then potentially look to start scaling out once we ran into our significant levels of resistance on the weekly and the 3-day and the daily time frame. No indications to be fully out of your long position yet. You let your winner run. We haven't had a significant change in trend. Hey, Mitch, thanks so much for the $2, bro. Where would I recommend starting? I happen to be biased, but I do, we do run a mentorship company, cryptocurrency.com. Would be a good place to start. Otherwise, if that's not something you're interested in, you can, of course, there's lots of good YouTube. There's lots of good free information out there. You can follow us on Twitter. You can join discord.krakencryptocurrency.com. We've got a technical analysis channel. Got a lot of good guys in there willing to help out. There's all kinds of good information out there. Lots of good books. Even though I don't trade chart patterns, Bulkowski's Encyclopedia of Chart Patterns is a good book. The book that really changed my life was The New Science of Technical Analysis by Tom DeMark. Even though I don't trade Tom DeMark's methodologies anymore, they're still burned into my brain. And I think they're really, it's just a significant way of looking at technical analysis and inspired me to start looking at it in a different way. Bennett from Bitcoin Trading Challenge has some fantastic videos up on how to exploit retail psychology, and he's also got a book coming out soon. So check him out. He's got a really good channel here on YouTube, Bitcoin Trading Challenge. See, Crypto Cred's got some good free YouTube information. Yeah, I mean that's basically what I did for a long time. What I still do, I still constantly learn to grow and obtain a knowledge. Really, what I've been focused on for the past several months, really the last 2 weeks intensively, is learning enough Pine to be able to code my indicators in. So I've got this one done. I've got other strategies that I'm working on incorporating into Pine Script so that they're just wrapped up. You just do what they tell you, and then you understand what is the psychology behind what this is telling me. What's the psychology behind it? What is the methodology, which is included in the reference implementation manual. You're welcome, man. Yes, I do. Wajdi, yes, I do. Ada, we can go look at good old Cardano. Good old Cardano. Ada BTC. All right, weekly time frame. All right, weekly time frame. Got a fresh crossover last week. Putting in a nice little doji right here at previous support. Kind of wait and see what happens right there. Below the weekly 21 exponential moving average, so we are not in breakout moon territory whatsoever. If we do get a nice weekly close above the 21 exponential moving average, it seems to me the next logical areas to look to take profit are going to be around 1420, front run this HVN, so around 1800, and then ultimately a nice moon target would be, well, I'd definitely be taking profits before 2000, so 1995. 1995. You want to take profit before those big round psychological numbers. 2000. That's traders are glued to that, so they'll set their buy orders there. So for that very reason, I'll be taking profits before we get to that level. Weekly time frame. So that's the big kahuna right there. 3-day time frame. 3-day time frame might be giving you a little bit more hope here. We do have a fresh 3-day cross over here, so we do have a potential trade. We do have a potential 12% trade on the 3-day right here. The only thing that worries me is you kind of got this. Thank you so much. Crazy World Videos, thanks so much for the sub on YouTube, man. The only thing that troubles me is that we do got that big HVN that's going to be and as well as previous resistance that we've got to come over around 1215. Also not yet above the 3-day 21 exponential moving average, so in fact looking like a little bit of rejection from it. But the daily trend is bullish. Daily trend is bullish. We did get indications to enter here, here, and here. The daily is about to break up above the 21 exponential moving average as well in the daily time frame, which would give you a short-term target, which would give you a 2% target. So not really as viable as the 3-day time frame right there. So that's what I'd be keeping my eye on there, man. I'd be keeping my eye out for that. If the 3-day can make a nice close above that 21 exponential moving average and we get this nice confirmed crossover right here. So if the 3-day closes above here, what's going to be the leading indicator for that? If the daily, I guess in this case, if the daily closes above the 21 exponential moving average on the daily. If that happens, then you can go ahead and potentially enter into a long position because you'll have your daily qualifications met. If your daily qualifications are going to be met by closing above the 20 exponential moving average, you're going to have a bullish daily trend. You're going to be closing above the daily 21 exponential moving average, and your Fisher is going to be also going above 0. You do have a short-term target that you need to keep your eyes on for, and that's going to be around 1150. Keep your eyes around that level for potential trend reversal. But if we're able to break that, doesn't mean take profit there. It just means keep your eyes open at that level for a potential reversal. If that does end up working well, then you've got another potential target around 1180 on the daily time frame. 1180 on the daily time frame. Yeah, 1180. That's front running the 3-day HVN, and you do got a long-term target up here. Oh no, what did I say? I said I'd be taking profits before 1200. So be looking to take those profits. So that 1800 or that 1180 is pretty nice to take those profits before 2000. If we're able to close above 2000, then you can look at the 3-day 55 exponential moving average, which is going to be around 1250. I'd front run that, and then we'll reevaluate after that. So just patiently wait. Best website says my AI bot is waiting right now for new opportunity. I will let the chat know when and what it buys. Hey, good looking out, man. I got a couple of them. I just put 50 bucks into Bitcoin and started to do research. Was that a bad idea? No, man. I think that Bitcoin's going to be, you know, again, don't, while I will not provide you with direct recommendations on managing your active position, because that would be financial advice. And even though I'm very blatant in the fact that I don't offer financial advice, and often, and really the whole, like, I don't offer financial advice. I just don't. You don't, saying that you don't offer financial advice, but then you offer financial advice, that doesn't help you. I don't tell people, if somebody's like, hey, I bought at blank and blank, you know, should I sell? I can't tell you what to do. I can't tell you what to do. You know, first off, that'd be inappropriate of me. What I can tell you is how I would manage a position and how I look at the charts. People need to make their own decisions. But I don't think that investing money, I don't think that putting money into Bitcoin is a bad idea. It depends on how far your time frame out is. If your time frame is 10, 20 years out, and $50 isn't a lot of money to you, probably not going to be a bad idea. You guys are seeing inside the dungeon right now, guys. Cool. I'll keep it there. Yeah, I'll keep my eye on. I'll keep my eye on ADA. It's a maybe. Not in my personal opinion, Mitch. Not in my personal opinion. But, you know, the downside to that is that those that don't approach trading, you know, seriously, that don't, you know, actively manage their positions, those that don't actively manage their positions often end up losing money, because the nice thing about long-term holding is that you don't sell, you know, so that way you don't have to sell at a loss. So ideally, if the idea is that the market will continue to move up over time, then holding is generally a good idea. However, if you're savvy about your trading and you have clearly defined exit strategies and a profitable system, then I think that holding has, like, for example, like, why would you not have, you know, taken indications to sell Bitcoin, you know, around 15,000 and then waited, and you're like, okay, price around $3,000, I'll buy back in. You'd have much more Bitcoin than you would have if you would have just held. You'd have much more Bitcoin. And if the idea is to have more of a valuable, asset, then I think that trading can help you out in that regards. Thank you, Bono. I highly appreciate that, man. Thank you for the sub, man. Highly appreciate it. What about capital gains tax? Well, get an accountant who specializes in that particular thing, and they'll be able to help you out. It's been my personal experience that if I make a tidy profit off a valuable asset, then it's okay to pay taxes on it because I made money. Yeah, capital gains taxes are a pain in the butt, man, but it is what it is. You know, I paid, you know, a lot of people are just terrified about, you know, paying taxes. I'm not. I've always paid my taxes. You know, I carry my losses forward. I carry my gains forward. I personally have an accountant that's really skilled at that. We're actually going to be bringing somebody on the show that does specialize in cryptocurrency accounting. So we'll have a nice little mini series with him. It'll be a good time. He's a very busy individual, so I don't have any direct scheduling on that. But I do know that it's going to happen. Very good advice, MJO for IM. Very good advice. Yeah. Trade with the trend, man. When we're back in a confirmed bull trend, you buy and you hold until we're in a confirmed bear trend, and then you sell. If you have access to leverage trading or you have access to a market where you can go long and short, then when we're in a confirmed bear trend, you hold a short open, and when we're back in a confirmed bull trend, you go long. Very simple. If you do that, you'll be quite well. And that's just as simple as looking at the weekly Heikin Ashi, man. What's the best indicators that I've seen in cryptocurrency? Well, in general, I think the best indicators are not indicators. The best indicators are Heikin Ashi. Heikin Ashi and Renko are the only two strategies that I know for certain work. I mean, they're all helpful in their own certain ways, but the indicators that I choose to use to qualify my trading and to help me give me frames of reference. What is your favorite color? It's actually green. Green is my favorite color. Green is my favorite color, and I don't really like the color red, and that's why I use blue and fuchsia and a calm blue background to actually give me some Zen Buddha trading. I did originally normally use black and white candlesticks, and I might go back to doing that. I might just go ahead and paint my bars black and white. It helps eliminate noise. It helps eliminate noise and emotional urgency. Because if you have green candlesticks plotted on your chart, it's a psychological indication that you should buy, and sometimes it's not always the best time to buy on a green candlestick. So I choose to use exponential moving averages, and I choose to use my indicator time transformation, which is a multi-time frame Fisher transform on a unique algorithm that I've had help compiling that identifies overbought and oversold levels, paints the bars pursuant to Heikin Ashi, identifies divergence. You can look at that divergence on multiple time frames. You can look at the Heikin Ashi on multiple time frames. And you can set alerts for all those things. That would be awesome, man. Hey, that would be awesome, man. I'd really appreciate that, man. That'd be cool. Yeah, black and white does look nice. I really like the way that it helps eliminate the urgency in my trading. All right, so basically, if we get a green brick printed right here, I'll go long. Venom green or a more nature-like green? I need the specifics. I like that. I like that hunter green, man. I like that hunter green. But depending on what you're designing, I'm not against that like sick venom green either. But nature green's pretty good, pretty good. I do come from an outdoorsy background. That's my major in college was entrepreneurial and diversified agriculture. Believe it or not, and my first company was an organic produce company. I ran that for 3 years, and that's really where I got interested in trading because, we would have a very busy year, and then we'd be kind of cooped up all winter with nothing really to do. I wanted, I've always been interested in trading and investing since I was 13. Honestly, my parents were very, very keen on teaching me how to manage my money, which really is what it's all about. There's lots of different trading strategies and methodologies out there. And I don't really care what anybody says. Like Bollinger Band, RSI, overbought, oversold works. It works. You can make money doing it. I personally think that my strategy is more successful, a little bit more complicated, but it's more successful. Gives me a higher profit margin, but that's my personal preference, and I spent a lot of time designing it. Anyway, I think it's about time to wrap it up, guys. About 3 minutes to 7. We've been doing this for about 2 hours. Really glad that I could come back and join you guys on Saturday evening. But yeah, I think it's time to wrap it up, guys. Let's thank you guys so much for joining me this evening. We got a couple things I want to talk about. So let's go to this bad boy right here. Make sure you guys go ahead and go on over to crackingcryptocurrency.com. Link is in the description down below. We are still doing a giveaway. We've got 6 days left. We're giving away 3 spots for 1 month to the premium trading group. You'll get access to all our signals and setups. You'll get access to our full team of analysts and traders. You'll get access to the members lounge chat room and the day trading VIP voice channel, as well as our live trade tracking sheet, our webinar series, and your own personal customizable trade journal, man. That's still going on. You just go to crackingcryptocurrency.com. There's going to be a pop-up. You click on it. It takes you right here. You can log in using any of your existing social media accounts, Discord, email, Facebook, Instagram, Twitch, Twitter, YouTube. If you follow us on Facebook, you get a point. You get an entry. Follow us on Twitch, you get a point. Twitter, etc., 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 etc. Discus is on there. We're not even on Discus, but maybe you guys can. Maybe you guys, yes, enter her face, Alex's rep. So maybe you guys can get some points for that. From studying agriculture to farming Bitcoin. Yeah. Yep. It is what it is, man. So yeah, make sure you guys go help that out. Helps support us and helps give you guys entries, and we'll do that random drawing in 6 days. I still have, guys, if any of you guys want Final Fantasy 14 online, I got a code for it. I don't play Final Fantasy 14 online. It's like fresh. It's brand new. So if anybody wants to leave a comment on today's video and let me know something that you've learned from today's show, leave that and I'll get a hold of you and I'll send you the code. That's about it, I believe. If this is your first time to the show, and you enjoy the content and you want to support the streamers, make sure to hit that subscribe.